It doesn't matter if you're just getting started or already knee-deep in the trading world. One brutal fact hangs over every trader's head. 95% don't make money. And if you're not prepared, that number could include you. Why? Because many of us dive headfirst into the market with untested strategies. Driven by survival emotions and greed, we often enter the markets with strategies that lack concrete evidence that they work. I was no different. When I first started trading, I thought I was being smart. I'd see a bullish candle, or some guru online say, "This setup is gold." I'd jump in. No backtesting, no checklist, just gut feeling and a lot of hope. And sure, once in a while, I caught a win. But most times, the market slapped me. Early on in my trading journey, I became obsessed with a breakout strategy. I'd buy when the price broke resistance, expecting a big rally. Sometimes it worked. Often, it didn't. I was baffled. Why is this strategy not working? Why was I blowing accounts on this strategy? After all, the guru said, "This setup is gold." But then, I discovered backtesting, and that was one of the monumental moments in my trading. So, I backtested the breakout strategy. I ran over 500 trades across 7 years of data and discovered that the strategy had a 40% plus win rate, meaning it lost more often than it won. Most profits came from just 20% of trades. The rest were small losses. It performed poorly in sideways markets, where false breakouts wiped out gains. And this information I learned became invaluable to my trading going forward. Without properly backtesting this strategy, I definitely would have blown many more accounts. Sofian Kabar's The Book of Backtests. Trading Objectively is a hands-on resource for traders who want to verify their strategies using real data. It explores everything from technical setups and fundamental signals to more advanced techniques like machine learning. The book lays out compelling reasons why backtesting is essential for every single trader. And here are the top 3. 1. Backtesting eliminates survivorship bias and overfitting. Many traders make the mistake of testing strategies only on cherry-picked, successful assets or during favorable time periods. But the problem is that the real markets don't play nice. Proper backtesting forces you to face the full picture by running your strategy across various assets, market conditions, and long time frames. For example, a simple moving average crossover strategy might show a 70% plus win rate on selected Forex pairs like the euro-dollar between 2010 and 2020, but this same strategy collapsed to less than 50% when tested across 20-plus currency pairs and 30 years of data. That's overfitting, where you fine-tune the system to one market or time frame so tightly, it completely unravels in real conditions. What looked like a golden edge might just be a lucky snapshot. 2. It quantifies edge through statistical significance. A strategy isn't viable until it survives at least 100 to 200 trades with a positive expectancy. Backtesting converts vague gut feelings into hard metrics like profit factor, Sharpe ratio, and maximum drawdown. For instance, backtesting a mean reversion strategy on the Standard & Poor's 500 futures across 15 years with 3,700 plus trades might reveal a profit factor of 1.8. This means for every $1 you risk, you're making $1.80 in profit. It's a solid sign the strategy is consistently profitable. A max drawdown of 12%. Meaning the most your account could drop during a rough patch is 12%. It's a manageable level of risk, so you're not losing too much when things go south. And a p-value less than 0.05. This shows the results are reliable and not just random luck. It's a green light that the strategy has a real edge. In contrast, untested retail strategies often show profit factors less than 1.0. indicating long-term losses. 3. Backtesting reveals hidden risks before live trading. Backtesting exposes fatal flaws like slippage, liquidity gaps, overnight gaps, that paper trading or intuition might miss. The difference between theoretical and actual performance can wipe out accounts. For example, a high-probability gold breakout strategy might show 25% annual returns in theory, but when tested with realistic slippage, 0.5 to 1%, commission costs, and news event volatility, actual returns could drop to 5% annually, barely beating inflation. Another example, a scalping strategy failed live trading due to order execution delays that didn't appear in raw backtesting. The truth is, backtesting separates luck from skill, and if your strategy can't survive 10+ years of historical testing, it won't survive the market. So, if backtesting is non-negotiable, the next question is, what's the right way to do it? I started like most traders, manually scrolling charts, tracking trades in spreadsheets, thinking I was building an edge. But manual backtesting is painfully slow and full of blind spots. It can't simulate real trading conditions like position sizing or lag management. Then I discovered backtesting softwares like Forex Tester, the sponsor of this video. Instead of guessing with static charts, I could simulate years of market data in minutes, test real trade management, stops, targets, trailing, track key metrics like win rate and drawdown. Real backtesting feels like real trading. Otherwise, you're just guessing. Forex Tester gave me the confidence to trade live without hoping for luck. Let me show how. Let's backtest a trend-following strategy submitted by the Freddy FX, a setup that uses the 220 simple moving average to ride market momentum. According to him, it works best in clear trending conditions and can be applied to stocks, Forex, or crypto on the daily 4-hour and 1-hour timeframes. Rules for long trade setup. 1. Price should be above the 200 simple moving average, a confirmation of the overall uptrend. 2. The 20 period should be above the 200. This signals growing bullish momentum. 3. When price pulls back to the 20, look for potential long entries during this retracement. Enter after a strong bullish signal like a hammer, bullish engulfing candle, or a close above the 20 simple moving average. Place your stop below the most recent swing low or just below the 200. Take profit. Use a trailing stop to ride the trend, or target a 2-to-1 or 3-to-1 reward to risk ratio. For short trade setup, 1. Price should be below the 220 simple moving average. 2. When price pulls back to the 20, look for short entries on this retest. Enter after a bearish signal like a shooting star, bearish engulfing candle, or close below the 20. Stop loss should be above the recent swing high or just above the 200 simple moving average. For take profit, use a trailing stop or aim for a 2-to-1 or 3-to-1 risk-to-reward ratio. After putting Freddie's trend-following strategy through 100 trades, with a $10,000 bank on the pound dollar, using the 1-hour time frame, with a 1 to 3 risk-to-reward setup, all tested inside Forex Tester. Here's what happened. Win rate was 33%, with 67% trades lost. That's 33 wins, 67 losses. But don't write it off yet. Despite more losses than wins, the account grew by 32.36% over a 28-month period. That's $3,236.48 in net profit. On average, each win brought in $359, while each loss only cost $128. The longest winning streak was 5 trades, but the rough patch, 9 losses back-to-back. This strategy will definitely test your patience. So, the verdict. In my opinion, it's a good strategy, but with room to level up. I'd suggest pairing it with a trend strength indicator, like the average directional index, to weed out the choppy setups. I will advise you stay tuned. We might just retest this strategy in the future. Backtesting offers you a powerful way to simulate hundreds of trades, learn from mistakes, fine-tune entry points, and perfect your strategies, all without risking a single dollar. And Forex Tester is the ultimate tool that brings this process to life, delivering a fast, realistic, and fully customizable platform to test your ideas. If you are ready to test your strategy like a pro, we've got a special offer for you. As a subscriber, you can enjoy an exclusive 5% discount on the Forex Tester website by using our promo code PROF5AC at checkout. Use the link in the video description or the pinned comment to get started now. After backtesting, another thing you need to pay attention to is proper risk management, and it can make you rich. Well, you don't need to believe that. Watch this recommended video to find out how. It will change the way you trade forever. If you have found this video helpful, please drop a like, share it with someone who needs it, and leave a comment below. I read and reply everyone. Until next time, trade smart, stay sharp, and may the trend be with you.